All right, guys. Welcome back to another video. It's been a very, very long time. We have news for Friday here at 8:30. Huge fucking news. CPI, right? Or I'm sorry, PPI, which is the Producer's Price Index, which is very significant at 8:30 coming in. We have also the University of Michigan's Consumer Sentiment. Hello? Okay. Saying that it couldn't hear me for a second. Let's see. Can you hear me now? Okay, 1 second. Okay, sorry about that. The Zoom was giving me a little bit of a difficulty here with that. So what it is, it's excuse me, let's see. So obviously greater for the currency, right? Greater than the forecast is good for the currency. Um, what it is a producer price index, right? For those of you who don't know, it's a change in the price of finished goods and services sold by the producers. So what it means, that's the core. That's the core price. And this is the headline PPI. So the expectation is 0.2%, and the previous was also 0.2%. I wonder what the year to year is. I'm not sure. I don't know if it tells us here 0.2 was in November. We had a forecast of higher, we got less. So that means that the change in the price of the cost of goods went down. So that's bad for the US dollar. It's bad for the economy because now it costs less to produce things, right? Which sounds good, but it's a change in the price of the finished goods. Make up about 40%. So food and energy prices make about 40% of the overall PPI, which tends to move, right? So that's why you have the core, um, uh, excluding the food and energy, because that has a very adverse effect on the actual reading. Yep, exactly. It's a leading indicator of consumer inflation. When producers charge more for goods and services, the higher costs are usually passed on to the consumer. Yeah, that makes sense. So actually, it would be a good thing to see a decrease. It would be good for stocks. It would be bad for the dollar, but it would be good for the U.S. market. So we're actually hoping for a less, um, but I'm actually expecting it to be higher. I would expect an increase in this number. That's going to be on Friday PPI. It's a very significant uh, uh, reading because that shows us the inflation in our country. And this is for tomorrow at 10. We don't really have anything tomorrow. I mean, we have like building permits in Canada at 8:30. That's not 10. We have some pretty volatile news. It's the supply management, right? ISM. And it's basically what it is 50 is the mean, right? That's the industry expansion, below is contraction. I think last month we got a 54 and the forecast was higher. It's just still not bad, but yeah, there was a small contraction. Um, it's the purchasing manufacturers index, which is it's the leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant. Yeah, okay. Basically, what it means is that it's the manufacturing index, and um, it's basically the cost also of manufacturing the goods, and that's the production of the goods. Those are the final step of the production of the goods. How much did it cost to produce those goods? And this is how much it is basically to manufacture. It's level diffusion index based on purchasing managers, excluding the manufacturing index. Um, the way I look at it is that yeah, basically, yeah, this is a better than I can explain it. I'd rather just read the definition instead of my broken ideas. It's 300 purchasing managers, which asks respondents to rate the relative level of business conditions. Yep. So basically, it's the manager's index, right? So it's the employment, production, new orders, prices. So it's more of a sentiment thing. as well as an actual, yeah, it is a number. It's based on a mean, which is 50, but um, in general, it's more of a sentimental analysis thing. And it is an important number because that shows us a gauge on what we're looking at. Uh, again, let me just look at it real quick. So we had a contraction last month, um, and I think we might be getting less, maybe even way less. We're expected to get 53. I'm thinking maybe even less than 50, maybe 50, maybe 49, maybe 52. Regardless, I'm probably not going to be trading at 10 at that time. So let's just take a look at US30 for right now. I just want to take a look at this and see what we're working with. Let's actually take a look at the entire market and see what we're expecting for tomorrow. Let's go on the 15 minutes for now. I'm gonna take off this smart money indicator thing. I just like to see it. I don't really want to have anything up. Um, let's just take a look at these lines just for a quick moment. I'm gonna leave the lines on. That's what I'm trying to say. Just because actually let me pause this music that I have here. It's kind of in the way. Okay, so why do I have this area marked? This is an area of very significant um, orders actually that were not filled. We have a pretty clear imbalance here that actually did get filled on the 15 minute, but that's not why I took this area out and focused in on it. I'm actually not sure why the price action is different on this one. That is a little strange, but in any case, we do have a pretty large volume imbalance here. So it did get filled, right? So we didn't reach it yet. We did sweep. Now this is something very interesting to look at. We swept this low of the demand right there, right? With that move. So we have sell-side liquidity available to us in the market. So we grab that low, invalidating this demand. So realistically, you can say this is a change of character, but really this would be the change of character right here because this is a significant level. These are small zones. These are small, insignificant price action, right? We had the high liquidity amassed up here. We swept those buy stops and those sell stops. Sell stop orders, right? So the stop loss orders that were up here and the buy stops of people looking to buy this thing went long. Maybe they're in profit for a little bit and then they were quickly stopped out as the stop loss below here. They got tagged. Late sellers who reached this zone were then taken out, right? We moved up to the supply. We kind of mitigated a little bit, but we didn't exactly reach into the deep levels. I don't need this anymore. This big blue thing, it's no longer relevant. It was relevant in the 4 hour, 4 days ago. Now it's been mitigated since then. So with this move up here, I believe this was FOMC announcement where they talked, yeah, Wednesday, when they talked about the 50 basis points potentially when Powell spoke, saying that they would hike by less. The market reacted accordingly, right? As it went up as a good news. So what happened here, right? This was NFP, of course. We lost money here on Friday, but what happened here? We had available sell side liquidity, but the trend, as you can clearly see, is very bullish. If we go on the 1 hour, let me just show you. Very, very bullish, very, very bullish, right? Nothing about this is bearish at all. I mean, even this very strong bear move, right, made it to down here more or less, and then just shot up, giving us crazy moves. We reached this 50% of this imbalance, and then we made it down to this one as well. More or less the 50%. 50% would be down here, but we didn't make it. We didn't make it. We made it down here, and now we're moving up again. So yeah, very bearish on the trend. So back to the 15 minute. What happened is that we moved down. We did not move higher, right? We put in the supply mitigation right here of that supply. So if we were to quite literally go, maybe on the 5 minute would be better to show you. I didn't catch this trade. This is a hindsight video, so that's fine. If you don't like that, it is what it is. But maybe perhaps I can do something. Where is that tool? The replay tool. Let's go back just for a quick second. So we have our level of supply right here. Let's label that as our supply. It's kind of in my way. So we move down, right? We moving down. So right off the bat, right? If we're looking at this objectively, we're moving up, yes. So again, let's say, how do we know, right? We see that there's buy side liquidity. We see there's a supply zone. We want to take where, prices making higher highs, higher lows, higher highs. But look at this. We did break, in fact, lower right here. So now price has shown us an interest in sell side liquidity. It is now changed character to attack a lower price. Now, what are we doing? So now what's the point of price? Why is it going up again if it's not going to continue lower? So right now it's engineering liquidity. So we have a strong level of supply here. Let's take a look at from this low to this one. No, that's not right. So it must be from here. Okay, so this is our level of supply that we want to take a look at. Let's refine it even more, perhaps on the 1 minute, I think would be even better in terms of a refinement. We could see better where the supply is that has not been mitigated. So I think that it would be this one right here. See that? Okay. So now let's go and take a look at the 5 minute. Okay, so now this is our level that we want to see get hit, right? Now it's cool if we don't get it, but let's see. We have a level that didn't reach it. Let me go back on the 1 minute actually. Let me see something. I don't want to rush this. I actually want to give it the video. I want to give this video the time it deserves. So we have a level of supply here that yeah, it's fair. It's a fair level. We move down, create another. So now we have a very obvious level of supply right here as well that actually the market did not reach at all. It never reached it, and it left a level of imbalance. So we have also a level of imbalance as well to consider. So now we actually have multiple levels to look at. So this obviously clearly gets ran. Okay, so I think this makes more sense to me. So this is the very big supply, right? This is the really the one that actually broke. Yeah, this did not break structure. This supply zone actually broke the structure. This is the level that is responsible for that, and it's leaves behind a big order. So we tag it in, we move down, we broke the structure here. This is a 1 minute time frame if we were to look at this, right? So we broke structure, we move up. Now we have a level of BSL, buy side liquidity, above here as well, but that's not for right now. That's in the later, because it looks to us that the market appears to be going for sell side. So now we would need to see a refusal to go up right here, broke structure again, right? We broke structure here. So red is going to be sell and green is going to be buying. So this is sell side liquidity, just if that's obvious. Now we have another level. Now we broke. So now so we have two changes of characters. One, right? One here. And the second one was here. What was the zone that was responsible for that? The zone that was responsible for that break of structure is here. Yeah, this one. So now price comes back into it here. Price comes back into it here. I would personally, I would like to take this. I would take that sell. I would take that sell, probably right here. Oh, wait, what happened? I would probably want to take that sell. My stop loss, I would want to put it safely above this high. So 32 pips. And I would realistically, going on the 5 minute now, I would realistically, I don't know what this is, but I would realistically look for a taking of lows. Um, yeah, maybe something like that. So let's see what happens on the 5 minute now. I mean, again, this is just seeing how price should play out Oh, this Zoom thing is really getting in my way. Let me move this. Okay. Let's see what price does now at this point. So we have price. Wow. Yeah. So, yeah, obviously clearly, very clearly hits our take profit. Let's go on the 1 minute, see what happened, at that point in time. What happened here? So look at that, price did reach our level. So, okay, what was the level it reached? What was the level that it reached? We had an imbalance here. Oh, we had an imbalance. That's right. I should have I didn't see it. I didn't see that imbalance. Wow. Oh, I have someone in this call. Hello, David. How's it going? This video is being recorded as well, so if you didn't see the beginning, you would also see you'll see this, but you also see the beginning once I upload it. So wow, so what we can learn from this is that yeah, this is a valid entry because we did break structure once, twice. We have confirmed that we also left behind now a new sell side inefficiency as well, right here. So this is our target right here. That's an easy target. I would also look for these targets as well. It's kind of hard. It's a little bit intimidating to see this stuff on the 1 minute. Actually, we have sell-side inequality, inefficiency here in terms of equal lows right here as well. So that's a very easy target. Yeah, I think this is a fair target for us. Obviously, it gets hit very quick in actually a matter of a few seconds. Actually, I think this drop would have been so big that my take profit would have. I mean, I usually like to hold my trades. I don't like to close them out. I mean, yeah, I would have gotten wanted to get out at that point down here, right? Where was it? Right here. I would have wanted to get out there once we broke that, but then it just went down so much lower that I probably realistically would have gotten out around here. So that would have been, yeah, I probably would have gone out at this major level of demand. Maybe I would have kept holding. I'm not sure. I mean, at that point, I would have kept holding. I think I think that's where I would get out. Knowing myself, I would have gone out here for almost 10.6 to 1. That would have been the trade. Let's go back for a second on how we entered that for David here, who can see, so he doesn't have to watch the video again. So on the 15-minute, we identified that price did, well, wait a second. Price broke structure here, right? Broke structure here. So it showed an indication that it wants to move lower, actually quite significantly. It actually did break structure here. Now, if you go on the 5-minute, just for 1 second, price did break structure. Now we moved up. We moved back into this kind of supply zone. We didn't exactly hit our POC on this move, which was right here in this area, this actual level of supply right here, to be more exact. We didn't hit it. We left behind the buy side inefficiency, which is these unclaimed highs. And now what happened was, so now again, we have a level that was taken out, right? This demand. So now demand, and this is the so important part and piece of reading price. So if we take a look here, let me just label this demand zone. This demand zone, right? This level of demand where the market came back, sold to be bought, it failed. It was broken, which disqualifies this zone and now puts pressure on the supply. So what was the supply zone that caused it? It would be this. Now, technically, that's the POC. This is the level of supply that caused it. Price comes back into the supply. Market makers are able to exit, and they have a big sell to the downside, taking out these lows, right? So that's a change of character once. Again. So now we take out these lows, and now this is the new low. So now this is a lower low, and now this is the high. Now, if you take a look at the 1 minute, we would see that this is a level of supply that caused this move. Yes, this is also that level technically, but this is a very strong level. I mean, even if we were to do something like this, we would see that this is the bulk of the zone. Now, here's the thing about these zones, is that usually it's not exactly a very strong zone, and there is resting liquidity above. And that's usually, now you could have entered this with your stops above, and that would have been a totally fine trade. But, oh, he's gone. Okay, that's fine. You could have entered this and had your stops above this. I mean, realistically, if you were to trade based on just price action and just zones, whatever, price came back. I mean, you could have technically entered on a 50% stops above. This is a valid trade. I mean, you could have, yeah, you could have taken this thing as well. It would have given you a very nice risk to reward. I mean, it held, you would have made money, of course, right? As we know, but I don't like those kinds of trades. I like to be more accurate. I don't know. It says something about it. This is a supply zone, so let me change that to supply. It's a valid trade. It is. Why would your stop be above? Because you have resting liquidity. Now, if you go on the 1 minute, it's important to refine your zones. Now, look, if we go on the 1 minute, we see yes, this is a valid level, but this was an also unmitigated level, right? This big wick up with an imbalance that the market, did it fill it? No, wait, that's the wrong one. Right, this is the right one. Did it fill it? So it did actually fill it, more or less. It filled the imbalance. But I don't think it satisfied this supply. So we got the fill, we moved down, broke it. Now we started moving back up, right? To where? I would say back to the supply, and we got a quick sell. So I think I might have entered that realistically. Maybe on the 5, we would see that it was not the level for us. How could we have seen that? Well, realistically, this would be that last level. I would need to see a break of structure. So let's see if our rules were met. So let's even go back to the 1 minute. Using our rules, we have a rules-based approach, of course. This is getting a little bit choppy, so let's close this. So let's actually take out all these things, just to make it a little bit simpler for us here on the observing side. So there wasn't really a change of character. I don't think any lows were broken, right? So I didn't really see an entry. We got spiked up, so that actually invalidates the zone. Once we get a spike up like that, it actually invalidates that zone, and then it comes back up and it moves down lower. But then it fails refusal 1, refusal 2, price moves up again, and it actually reached. Let's measure that. Okay, so it actually ended up reaching, let's see, right there, which is actually very interesting because, yeah, that's the very interesting level of supply. And if we take a look at our POC, wait, no. Yeah, it's basically this zone here. Basically this entire zone. So now we had this zone violated with that spike up, so we wouldn't have actually gotten our trade. We wouldn't have gotten our trade. So let's take a look at what you see. So again, we spiked the higher time frame, spiked it. I think that if anything, we could see that this level of imbalance was more the timing, more of the interest of the market. That was more of the interest in the 1 minute. You can really see the accuracy of the 1 minute. So we had our supply zones. You can actually see it. Yeah, basically. Yep, it didn't even reach it actually. Yeah, wow. So this is not even a valid zone. I can see it. Yeah, you can actually see it on the 1 minute even better. That's exactly what I'm talking about. Look, yeah, technically, look, it never even never really went up into it. right? So look, it didn't even touch the supply. So this is the true move. It's actually 50% of it. It's exactly 50%. So now this is the supply. It reached it. Now let's see if this low goes, right? We had low one go, broke of structure one. Let's play it out. Let's go on a 5 minute. Actually, let's identify how to identify levels of structure. I think these are the down candles. So now we broke structure once here, right? With this move. 1, 2. One could argue this is the second. That's fine, but let's just use this low. This is the low, major low that caused the major high. This level went out. Now we have an imbalance, and on the 3 minute, we have a let's go on the 1 actually. Now we have a minor imbalance up here, right? We have our little level of supply. So we broke structure once, mitigation. Broke structure twice, now we need the mitigation. Now let's look for the entry signal. Now we kept breaking structure, but wait, we're still waiting for price to come back up, right? Sitting for price to come back up. So look, there's no entry yet. So actually, I don't think I would have entered this yet. I would wait for a big candle red. Okay, so I probably would have entered on this candle, knowing myself, and I probably would have put my stops above the last mitigation. Realistically, that's probably what I would have done. Yeah, just knowing myself, the last mitigation candle is protected BSL. So let's actually make it red. No, let's make it and that can be saved on. So we can make it a protected level. So now we have a protected level because this is the level that caused this break, showing us that price is in fact bearish, right? Now that we broke this low, we broke this one, this is the zone that caused that low to go. And this is the mitigation of the supply that caused the initial break. This is the level that should be protected. So we didn't exactly break structure here. That's fine. We did here. We broke structure. Broke structure here. So you would like to see the mitigation of the zone that caused it. Wait a second. Okay, I don't know why that happened. But, okay. Now this is interesting. This is interesting because if we broke, right now, again, we broke structure here with this. So again, what was this point of this whole thing? Let's go take a look at the higher time frame. We had the mitigation of this imbalance on the 1 minute. We had an imbalance zone here, mitigated that, and it moved lower. It took out this sell side liquidity. Now it's coming back up. Now this is all protected price action, but we have a zone here that was not really mitigated. So we came to mitigate it. So now once we got the mitigation, right, of that zone, we took out structure once, came back, mitigated the supply, which is this. Again, on the perhaps on the 3 minute, you can see that a little bit better. Right, this is the supply zone, got mitigated here, and it took out the structural low right here. Even if you want to consider this one as well, it took it out. If you want to consider that, took it out. Took it out here, continued even lower. So took out actually this one as well. If you really, really want to play it safe, we can even take out this low. So we had a second change of character as well, right here. Now it came back into a level of interest, which is up here. One could even argue that it would actually enter back into the supply zone on the 3-minute here. If that's actually even better, I would actually even prefer that. I would even prefer that to enter off of with my stop loss realistically above these highs. So I would even want that. So now I'm looking at this, I would have entered on the 1-minute, but I would have loved to enter on the 3-minute. So I think that it's important. So even as I'm showing you guys this, I am learning myself because I'm looking back on how I played this day and how I could have done better. And that's something that you need to do. And it's always important because, no one's a good trader. No one's the best trader in the world. I mean, it's just not possible. I mean, it's always important to learn and see. So now that I'm looking at this, it's important to mix the shorter time frames with the higher time frames, and it's all mixing in together. So actually looking at this, 3 minutes shows me a clearer picture of our supply, and this is a completely valid supply, as this was the one that realistically broke structure. I would have loved to take an entry off of that. As you see, there's a hidden supply zone is in here right there, which is completely valid, and it did cause a change of character right there. Realistically, I think how we could have entered that. Let's see. Yeah, okay. Let's go to the 1 minute now. We have our supply zone labeled. So realistically, this is so actually, I think maybe perhaps even on the 1 minute, using the POC, using this tool. So it's actually showing us this is the level of the POC. So we could actually use that. So we would enter on POC level, which is here. So I would, and then then you have the imbalance under the POC. So actually, now that we have so using the POC, which was from this high to this low, this is the supply zone that it highlighted. So we want to see price come back into it, enter on the entry. Yeah, so that would be the entry, 50% of the imbalance, highs above the supply, above the mitigation. That would be perfect. Yeah, that would have been perfect trade. Perfect trade indeed. And if we were to hold it to target fully, it's insane. Insane. Now that's some crazy accuracy. So what we could have learned from this is realistically, and now I want to take a look at how we could have entered that again. So mitigation of the original supply, right? Because we had, I just want to break it down for everyone again. We had an unmitigated level right here. It did not mitigate. When we had the 50% mitigation of that zone, right? Right here, which broke structure, which then broke structure again, which then broke structure again. So we had 3 triple break of structure, triple break of structure. So let's take that, put it right there. No, we broke structure realistically 3 times. So we went back to the original origin, which was unmitigated because all these zones were mitigated. Came back up, moved rather quickly, didn't give us a chance. Right now we moved down. But this is still our level that we're looking at. That's the POC level. Now let's see if there's any entry criteria. Boom. Big rejection. Entered right there. That's it, baby. Insane. Insane. And then how could we take in buys? Let's see how we could take in buys. So we got our low. This was the low created. And now we have a high. Let's see what happens. change of character to the upside. Let's see what happens if we just if it's a fake change of character. So now we had two. 1 second, sorry. We had two change of characters. We had one to the up, one to the down. So look at that. We had refusal one. So we had a refusal of price to continue lower. Refusal one. Look at that. So now we had a secondary. So let me just make this smaller. We had a secondary. That's beautiful. Look at that. So now we had a secondary change of character. So now let's wait for the pullback, if there is one. Now, if we were to measure this using our POC, it's telling us that this is our level of buying. Let's see if we get anything. So we get refusal one, refusal two. You had an imbalance entry here. I think on the momentum play, maybe it would be better to not enter on a demand. I think it would have been at this point. Oh, but we didn't even enter we didn't even enter that. Okay, fine. So there wasn't really an entry. So we moved down, respected that low again. We had another refusal right here. I mean, at this point now we have, no, wait, we have this high to go. So we actually had a nice breaker right here. That would have been a nice entry, right? Because we moved down and then we moved through it and broke structure to the upside. Now this is the area of interest. We also have an imbalance here as well. That would have been a nice entry as well using our trading ideas. That low as the low. And maybe, maybe taking out the buy side liquidity that we left in the past. Maybe that would have worked out for us. Perhaps we could have found another entry. So that obviously get our take profit. What is this zone that we identified here? Oh, that was our zone. The POC that it hit, yeah, and then it touched it again, left behind buy side, came down. It actually came down to our level here. I see. Okay, interesting. Using our POC, let's see if that would have worked for us. Interesting. Yeah, so it hit it right there, and then it took out the high. Let's go on the 3-minute. Maybe it'll be less. Took out the high. Now we have a few areas. Now this is this would be the level that we want to see. Okay. So took out, it completely took out and mitigated. Realistically, it took out the high as well. Now let's see if it comes back down to our zone. Uh, this is our demand level. This is already on Sunday. Oh, okay. This is already right now, right? This is already today's price action at this point. So so this is already today. So this is right now. Okay. So again, what happened here? Okay, all this happened. And now we moved up, took out this, took this out, refused once, refused twice, broke structure, imbalance, entered the imbalance, boom, see you later, right? And targeting the highs. So now we can take out all these reds, no longer relevant, no longer relevant. This is no longer relevant to us. Okay, but we can leave these. Okay, so we have levels that were not tagged yet. I think that if we're going to see a buy, I would need to see this demand get hit, right? I mean, that's what we need to see. So what happened? We stayed within the high of the supply zone, or I should say, but look, we have a strong level of demand, right? On the 1 minute here, we can see that this is a strong level as it held multiple times. This was a level of imbalance, I should say. And then this, yeah, but this is a strong, it looks like a strong high. So now our next level to be tagged should be this one. That's our long-term high to get ran. I think we could see it get ran. So yeah, we did put in a new low. So we put in a higher high, and then I put in a lower low, and now a lower low. But now we put in a higher high, a few higher highs. Now we're continuing the trend, and I think that the next high to go would be so this is no longer relevant, right? That high is taken. So we can mark that off as well. But although price did significantly retreat, we broke structure. But nothing of major concern. Nothing of major concern to us. I would need to see direction. Tomorrow we're going to see, but I'm bullish. I'm very bullish. I think that we could continue seeing this bullish uptrend. I would like to see trading off of this zone and maybe looking for a buying opportunity. I don't think that would come back down here. This was a mitigation. This was a continuation of the zone. This was a strong level. Now, I guess we could see some kind of buying. Let me take a look at this at this point here. Yeah, both of the zones are saying that this is the zone to hold. So let's take a look at that and we'll see what it says. Let's see what the smart money indicator says as well. Yeah, that's his level as well. This level here should be strong. Interesting. Okay, very interesting indeed. So this is saying, yeah, big structure. It's labeling the same things as me. Right? BOS, lower low, chalk, BOS, lower high, and then higher low, and then chalk, and then this is now a higher high. So the trend has officially shifted bearish, I mean bullish, officially here using this indicator. Now this is all bullshit, but I don't really, yeah, this doesn't mean anything to me. But in essence, now I would be looking for a buy from this point to that. So I would be looking for something along the lines. Stop loss below. Yeah, that would be a nice trade. I think that would be a very nice trade. So I would love to see. Hopefully we can get it. I think that's it. So again, what did we learn from this? How do we enter once price comes into our zone? Price comes into our zone, our supply, it mitigates. Price comes to our zone and mitigates. We don't enter right away. We wait for the break of structure one, right? This is the zone. This is the point. SSL. Wait for the break of structure one. We wait for the break of structure two. We got it right there. Or I guess not yet. We'll get it now. And then we would enter off of now the POC. And so now again, POC. This is for if you didn't get it at all and didn't make any sense to you. This is the supplies. This is the book of the supply. And that's the low that went. Oh, wait, no. Oh, because this zone caused that to go down. Right. So let's take a look at this. Which zone caused it? Yeah. Okay. Because this is if it stalls, you don't get in. If it's a base, you stop it at the base, and you see the thing that responsible for the base to be even created, because that's a small move. That's just take out liquidity, and then this zone will be tagged as the level that of interest. But really, this is the zone that price is going after. That's a discount. So if you were to measure, and how can you do that? Because if you measure from premium to discount, right? This is the premium of the move. This discount, this is all in an equilibrium. The price is probably going to generally reach to a higher level. Maybe if you did an OTE, yeah, it's actually even external from that, so not even relevant. So if you have a premium discount, it would be in a highly discounted area. So prices reach once price reaches our discounted zone, and we have a rejection, right? And a very strong wick rejection that engulfs it. Perhaps even this, we broke that low, showing major signs of a move down. Probably enter somewhere around there. I mean, it's pretty discretionary. There's no actual. I need to work on my entry rules better, but I would like to see just this is more conservative. But I feel like in general, if price is coming back into, I think I think I would take it honestly. I think at that point I would look for a fair value gap, somewhere of interest for me to enter. A fair value gap that was left behind on the impulsive move down would have been a good entry. Even on the supply, just not exactly have too much of a big headache over it. I mean, if it goes back into it and it goes up, you're gonna get stopped out, and that's fine, and it happens. But you can't be afraid of risk, So I would just probably enter on this and have I would just once it gets into it, I would enter it and just see it play out. And yeah. So again, it would just be labeling the zones correctly, waiting for those two change of characters, so that one and then the two, and then we even got a third, which is great. Third is just an added bonus of confluence. So once we got the third break of structure, now we know, okay, or even the second, but I do too, but three would have been good as well. Okay, three, waiting for price to pull back. Could have taken that entry with stops above. It could have been fine as well. I probably even would have taken that, and that's a valid entry. But price wanted to go up just one more time, and that's the valid POC, right? This is the valid POC. Yeah, that would have been it. That would have been it. So I guess now that we have done that, we can go back to where we are right now. Wait, no, I don't want that anymore. Okay. So where could we see an entry from? 3 minute. Let's see if we see anything. Well, I do see an imbalance very clearly right there. That's where I would take an entry. Yep, that's my entry right there. Definitely that's my entry right there. And I would take it at 50% of it. And my stops would be probably realistically here. As there is another imbalance, maybe on the 5 minute, we could see something even clearer. Yeah, we have a 5 minute imbalance here. Yeah, it's not really an imbalance on the 5. On the 2 minute, maybe we see something. Yeah, that's a little bit clearer to me on the 2 minute. We have a 2 minute imbalance as well, right there, just like that. That's what it would look like. That's what it would look like. So we have, this is the, so again, let's just measure this. This to here. It's saying that this, so I don't know. I guess we could realistically could enter at the 50%, and then have our stops realistically like this. I guess that's a safe trade. Yeah, that's a pretty safe trade. I should say so. At least I would say that. All right, I guess that's our trade for tomorrow on US30. While we're looking at that, that's literally like it took me a while, but that's a trade for tomorrow that I'll be looking for. What is this? This is the S&P 500. Oh, I'm sorry. This is the VIX. This is the VIX. Wow, my bad. The VIX is bearish, so we're bullish on the S&P. That's how it works. Currency index, the dollar, is also bearish, so it's also good for that. We're long-term bearish, yeah. So that's also good for us. Yeah, it's looking good. It's looking good. Maybe look at the bond market. Bond market is also moving down. Yeah, I mean that's it's all looking good. Yeah, we've actually been going up a little bit. I'm gonna show you guys a nice little website, bond yields. Oh, I think it was yeah, this is the website I love to use. It just explains it all, and it's just very, very useful to see. It actually shows you it's updated every day. This is the current yield curve. I just look at the 10-year because that's just yeah, you see. Oh, I don't need to, no, I don't need that. So this is the current yield curve. It's very, very inverted. It's actually getting worse. So our current is at -1. It actually got worse. And on the 2-year, it's at minus, it got even more inverted at minus 0.7. Last time I checked, which was last month, it was at minus 0.39, right? That was last month on October. November, it's at 0. Yeah, wow. Or 2 months ago, it was at 3, and now it's at, yeah, November 7, 8 almost. Wow, crazy, crazy, crazy. S&P versus Treasury yield, yeah, it's just crazy. And it just explains it how it works, and it's very, 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 very accurate, and it's very useful. And this is like a long term. Look at this S&P. It shows you the S&P 500, how it goes up, the 1-year and then the 10-year. So as the 10-year and the 1-year go up, that would it would invert. Wait, I don't need this. How do I grab this yellow? Oh. So look at, it says the 10-year rate. It's yeah, the higher. So look, so this is the 10-year rate. I want to grab this yellow line. So look, as the 10-year, right? It goes down. Look what happens to the S&P. goes down, it goes up. As it goes down, as S&P goes down, the yields go up. So, and this yellow line is showing you the yields. So, and it's a healthy growth, right? Always going up, going up, going up, straight yield, straight yield. Now, when you start flattening? Around October 2022, starts to flat. So let's actually take a look at a month ago. So this is April, September. Oh God, it took forever, huh? So this is the yield curve over time. So in periods of recession, it's going to show you how it flattens. So look, I mean, now look, it's downward, right? Downwards. Look, it's very, very interesting. So the yield curve shows you, and then these shaded zones are recessions, and the S&P shows you, right? It shows you the stock market, obviously. So look, let's look what happens every time it goes inverted. So up, it going up, it's going up, it's going up. Right, it's very strong. It's in an uptrend. Starts flattening, right? Now we have a downtrend in 2000. This is the dot-com bubble. Dot-com bubble goes up again. All good, right? Sign of the time, sign of the economy. Starts flattening again. It goes up a lot. Interesting. But it did flatten. It just moved really quick. I wasn't able to stop it. But look, it's very strong. Economy is strong, very bullish, right? Now we're in 2017. We should be nearing COVID. Yeah, COVID starts flattening. It goes in a weird way. It's starting to act really weird. Yeah, and now we're here, and now we're at a flattening level. Okay, I think I've seen enough. I think I've seen enough. Okay. Yeah, I mean, at this point, let's refresh this. You need to understand also what all this stuff means. It's very, very significant. I mean, look at that. We are at very low levels. I mean, every time the level, oh God, every time we've dipped below this zone, this median point, which is the 0%, which is the spread between the 10 and the 2-year, there's been a recession. Once here, recession. Here, recession. Here, recession. An inverted yield curve has predicted the 7 recessions in the past. We didn't break it here, but although we were very close and we got COVID, and now we're down here. And it's actually very low. I mean, we were even lower than 2008, which is very scary to me. I think we're in some deep doo-doo right now. This is a very bad yield curve. I think we're going to see a very big move to the downside at this point. I think we're going to see the stock market go down. So how am I saying that while I'm bullish on the S&P? Right? Because right now, I'm bullish on the S&P. Right now, I'm bullish on the S&P. I think it's going to take some liquidity, maybe even to a level where I didn't expect. Maybe we might even grab these lows and reach a level of supply. And at that point, I mean, of demand. And at that point, we would go up, maybe even something unprecedented. Even this is showing that this is a strong level. You guys are gonna have to see. I think we might really be in a strong uptrend on the S&P for tomorrow, and I would like to see that trade occur and maybe come back up. Maybe not break this high. Maybe come back up to unmitigated levels. Like for example, right here, we kind of left the zone unmitigated. So I would like to see this zone get grabbed. Maybe that would be our final target, actually, to be honest with you. And then at that point, it would be a shit show of sells. That's what I would like to see. And then just, yeah, grab it and then just sell off and take out this low. This is a weak low. It's not going to put in a new high. So I'm bullish, but not really. I'm not really bullish because I'm actually long-term bearish on the S&P. And I think this is going to be that selling opportunity. And I think that the 10 a.m. news is going to trip this high and then we're going to sell from there. So I would actually be looking for a like-minded sell from at that point. Yeah, literally like that. That's what I would be looking for. It's a little bit crazy, but that's what I would want to see. And I think that's gonna be it for today, guys. I think that's it's been enough. Thank you, and I hope you guys enjoyed it. I think it was very informative. At least for me, I had a good time, and I hope you guys could enjoy it and appreciate the content that I'm providing you. And I'll see you guys in the next video.